Hello everybody, so this video is entitled The HIMS Q1 Call. It was too good, so we crash. Because to the surprise, I don't know if I should laugh about this. I definitely not cry, but kind of jokingly cry about this. But it's ridiculous, right? The stock is down 13% on what I found to be an absolutely outstanding quarter. The market doesn't care about fundamentals. And let me tell you, I think what spooked the market. I think the market was spooked by the write-off that they had to take. They had to write off something like, what was it, 30 million? $28 million. They had to write off $28 million for their investment in compounding manufacturing equipment. They had to write that off. Well, I thought the market wanted them to stop compounding. I thought the market wanted them to have GLP1s, branded GLP1s. They do now, but this stock was going to drop no matter what. Like, it's such a manipulated stock. It was going to drop no matter what. So I'm happy to see him just invest in the future. But him said two things that, of course, the market wouldn't have liked. They said they took a 28 million write-off for compounding equipment, and then the theme of the call was we're gonna invest heavy in scaling. We're gonna focus on scaling first, focus on growth first. They talked about AI talent and hiring an AI team. I think they have an AI team of more than 30 people now, they said on the call. HIMS is focusing on the long term, and the market absolutely hates it. So let me just quickly address the fundamentals. So somebody in the comment section of my other video told me, oh, you're wrong, the margin is not 14%. Actually, the margin would have most likely be 14% if you added back the 28 million. If you added back the 28 million to the 44 million of adjusted EBITDA, add back that money that they didn't write off, you would have had margin in line with what it has been in the past. Perhaps a little lower, perhaps 12% or 11%, but that doesn't change the calculation of my EV over, my enterprise value over gross profit over revenue growth metric. That doesn't change anything. I mean, we're talking about tiny differences, and the EBITDA margin only changes the rule of 40, which they are easily in. They easily reach that. So to me, I'm not fazed at all by the write-off of $28 million. And also, the question is, okay, you write it off, but it sounds like you throw it away. Are these investments lost forever? No, I don't think so. They're going to sit underused at one side of a factory, but I don't think these investments are lost forever. Maybe the intangible part of these investments, yes, but a lot of these investments were tangible. I don't think they are lost forever. They took advantage of writing it off. They pay less taxes. It's good for them. Let's now talk about maybe some people telling me, oh, well, this business is not going to grow fast, or it doesn't grow fast anymore. So you can see they guided between 19 and 28% growth in 2026 over 2025. And that would look like a heavy deceleration compared to 59% from 24 to 25. But I think this top line growth is absolutely sandbagged, and there's a very simple reason why I think that. We are missing 228 million from eucalyptus, which is going to close probably in the next 2 months. And by the way, eucalyptus is growing very fast itself. So actually the ARR of eucalyptus when eucalyptus closes may be 500 million, maybe more than that. So we are missing the contribution of eucalyptus. And I think, I don't know how much they included in this, but based on what he said on the call, I think we're missing a lot of a branded GLP momentum. From what I understand, the branded GLP1s are a hit. I will get to that at the end of the video, but he mentioned 125,000 shipments alone of Wegovy in 6 weeks. Their run rate on branded GLPs is 100,000 a month, on which they earn that $149 a month, which is literally pure margin. I think that's not included in there either. So growth deceleration, of course, we have a lot of large numbers playing in, but in my view, there's no way we do just 28%. We're going to do more. We're going to do in the high 30%, at least in my view. That's my expectation. Maybe more than that if we accelerate in the second half. Okay, so let's now focus on more call specifics. And again, what I've discussed just now was also discussed on the call, but let's talk about some specifics. Takeaway number one, we're all about AI. That's what I wanted to see. I wanted to see them discuss AI, and actually, one of the first questions, what about AI? It's all about more data, more chatbots talking about different agents, from a coach to an agent that reads your lab results. So more data, more chatbots, better recommender system. Dudum at one point talking about some people sometimes want to see a second doctor for a second opinion. Well, if it come to HIMSS, they could have opinions from thousands of agents that are specialized on different matters and different things. And so you could imagine a future where all of this data is used to train agents, and you could have a medical team living in HIMSS, and the medical team could consist of dozens of professionals that specialize specifically in one thing. Like, why? Let's say, their first product is ED, right? They have the most data on ED. Why wouldn't you have like an ED specialist agent who only does ED? Right? And you could even imagine something more specific, like an ED specialist agent who only does ED in people 65 and up. It's so specific. You can train agents to be so specialized in certain things. And sure enough, they're incorporating these insights, they're incorporating this data throughout the app. It's personalized experience. The app is essentially, in my view, going to become a doctor in your pocket. And the AI talent, the CEO under Dudum talking a lot about the AI talent that they're having apparently an easy time recruiting because they are aligned with the mission. And of course they would. Like, if you're an AI expert, you understand that data is everything. And HIMSS has the data. 2.6 million people feeding in data every month. That's the flywheel. That's the start of the flywheel. Anybody in AI understands that you want to join a company that has a lot of data. And they have proprietary data in a very unique way. Dudum mentioned almost 10 years worth of data. And that's very special. Moving on. And this is something that may have spooked the market. They announced continued capital investments. It will be the focus of 2026. Continued investment in personalization, new specialties, in scaling and in data intelligence, in data and international expansion. Of course, with the closing of the Eucalyptus acquisition. And you can see they continue their expansion at their facilities. They are now covering a pretty large part of the USA, at least the East and the West. Maybe they're missing Texas. Wouldn't it be nice to have him join in Texas, join me in Texas? But anyways, it's okay. They are growing pretty fast. They're all over. So that's, and CEO mentioning a million square foot. Was it even more than that? Yeah, no, it was 1 million square foot. That's a lot of warehouse space. You can look at their facilities. Of course, they have their compounding facility. They have their lab facility. They have their peptide facility. That's the CS Bio peptide facility that's in the heart of San Francisco. And they acquired Your Bio, which is the painless needles, which they will likely launch at some point with that other Lancet company that they acquired. And if you put them all together, you could imagine remote or labs by mail, and then you remove even more friction. So they got a lot of tangible Capex facilities going on, and I think that's a pretty big deal. All right, moving on. Another takeaway is that HIMSS, and they've said that before on a few occasions, they see themselves as the preferred distribution partner to drug companies, to pharma companies, to anybody innovative in healthcare who's looking to distribute their product. They would likely go to HIMSS. And he took as an example the GRAIL test, the cancer test for GRAIL. Well, is there a better partner than HIMSS to distribute a cash pay cancer test? I don't think so. So I think a lot of innovative companies who have cash pay products will look at HIMS as an opportunity to use the platform to sell, and then they revenue share, right? They do a little share of the profits. But HIMS is becoming that preferred distribution partner and perhaps the first contact, the first point of contact for a company that would have an innovative solution, whether it's in prevention or whether it's a drug or whether it's a peptide. We'll see how that goes. But this emphasis here on this slide for me is, of course, their reach. And of course, they started out as an American company, and they estimate, right now, they estimate that across all of their regions, they can reach over 100 million customers. But you can see if you add up the max addressable market, it's much higher. 250 million in the US, 200 million in Europe, 30 million in Canada, 20 million in Australia, 100 million in Japan, of course, focusing only on the adults, right? I don't know how they partition that. They probably remove the edge of the distribution, right? People too old, people who are like young adults, they probably remove those. That's how they get to only 250 million, for example, for the US. But anyways, that's a huge amount of people. You can see here they estimated 280 million plus. So it depends. 20 million Australia. So okay, they gotta check those numbers here. But it's in the hundreds of millions. It's a lot of people that they can reach. They are the distribution partner. They can become the distribution partner for a lot of innovative companies in all sorts of screenings and also all sorts of health outcomes. Going to HIMS makes sense, and of course that's a selling point for them. Talking about their acquisition, you can see they've done Honest Wealth, H&H, Zava, Eucalyptus. You can see they've done pretty well at acquiring and growing internationally, and I think that's going to be a hit. I think HIMS they own the business model in the United States, and once it works well in the United States, they roll it out abroad. Right? That's the classic. That's every tech company does that. If you compete in the USA and if you succeed in the USA, the odds are you can copy paste a lot of what you learned in the USA and apply it abroad. Of course, you couldn't do that if you were reimbursed healthcare working with health insurance companies, but if you're cash pay, it's much easier to do that. And HIMS is all cash pay, so it's much easier for them to do that. And then let me, of course, conclude with the branded GLP-1. So, of course, still a lot of questions from analysts about the GLP-1s. Analysts seem pretty satisfied about the GLP-1 questions, to be honest. They pressed them much more on prior calls than on this call. And frankly, due to them, I don't know the right answers. Like I said, 125,000 shipments of Wegovy products alone in the first 6 weeks. He didn't say how many they referred to Lilly Direct's website. How many did they refer to Lilly Direct's website? Right? Is it another 25K? Is it because it launched later in the quarter? Do they not have enough information for it? But it's huge. It's enormous. Dude, I'm talking about the run rate on branded GLP-1s being 100,000 a month, 100,000 prescriptions a month. And regardless of margin, so of course on Lilly they just redirect, so I have to assume they have no margin, no kickback on it or anything. For Novo, I don't really know the margin profile. My guess is that Novo makes more money than them on the drugs. But regardless of margin, they still earn the $149 a month for the RX. So unfortunately, in my view, I would much rather see them fulfill everything and have like a $249 or $275 a month plan, and then include the doctors in the mix. But unfortunately, they have to do it this way because it's sort of how the industry has evolved. LifeMD is the same way, and Roe is the same way. So it's unfortunate, but the prescription fee, the $149, is fully for them, right? I mean, I would have to assume this is 80% margin, maybe even more than that. And so the momentum is here for GLP-1s. Dudu mentioned how impressed he was by the momentum in March. Very impressed, he said. Peptides, he said they'll definitely gonna do the peptides. The first ones that are on the list, they will launch them, but they just say they will go slow, but they'll be the best. He said that before. We'll go slow, but we'll be the best. Painless needles and labs, talking about that a little bit. Their plan is to move forward with YourBio, move forward with these painless needles. Of course, labs is a top of the funnel for them. Labs is a way to acquire new customers. And lastly, the last thing he said is wearables. he said that they'll definitely work with whatever exists. If you use Android or if you use Apple, they'll make the app work with whatever wearable you have. But they also want to launch their own, perhaps. This was the sentiment I got on the call. Perhaps they want to launch their own. And last point, number 8. I forgot about this, but I wanted to say this. There's buybacks, right? They have a buyback program in place. So I'd be curious, like if they keep getting no respect, like right now, minus 13%. Do you buy back some stock? I'd be curious about that. I would like for him to do that at this point. The stock is way too cheap on my metric, as I showed in my prior video. I deleted my prior slide. In my view, this stock is too cheap. Yeah, there you go. That's my prior video. This is a slide. 0.11, and we get a 48. We are at a 48 on Rule of 40. So in my view, this stock is just too cheap. Anyways, this was not investment advice. This is not financial advice. This is only entertainment. I'm hoping you were entertained. I am an entertainer only. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.